Welcome to Alpha Insights. I'm Asher, your guide through the ever-evolving world of finance. Today, we have a fantastic guest joining us, Kate, our resident fixed income specialist. How are you doing, Kate?
Thanks for having me, Asher. I'm doing well and excited to delve into today's market action.
Absolutely. So, let's get into it. The stock market had a bit of a mixed bag today, didn't it? We saw the S&P 500 slide a bit, around 0.82%, while some microcaps really took off. What's the big picture here?
Yes, it was indeed a bifurcated market day. While we had those larger, more established stocks pulling back a little, tiny stocks, often referred to as microcaps and penny stocks, were surging dramatically.
So, it sounds like there's a split between the market's movers and shakers, right? What's driving these small stocks to rally?
Exactly. A lot of this volatility in microcaps can be attributed to thin liquidity and speculative trading. Stocks like Rollor skyrocketed over 800% today, likely based on company-specific news or just sheer market chatter.
That's wild. 800%? That must have caught a lot of eyes. But, for investors rushing into these stocks, what should they keep in mind?
Great question, Asher. Investors need to be really cautious. These kinds of jumps often happen without solid fundamentals backing them up. The moment the news fades or profit-taking begins, the prices might drop just as quickly.
Certainly something to keep in mind. Now, we also saw some big drops in certain stocks like BC Techs, which fell by more than 55%. What's behind those significant declines?
Those sharp declines, especially in biotech and smaller name stocks, often relate to specific events like clinical trial results, regulatory news, or even just profit-taking. They can signal underlying issues that might scare investors away.
Right, and it's important to pay attention to market breadth, isn't it? If the larger caps aren't performing well, what does it mean for the overall market?
Exactly, Asher. If big names are lagging and we see a lot of selling in major indices, it can impact smaller stocks as well. The market might look volatile on the surface, but without institutional support, those smaller gains may not hold.
Sounds like a recipe for caution. And we haven't even started talking about interest rates and inflation.
Absolutely. Investors are quite sensitive to those factors right now. Even a lack of fresh policy can influence sentiment and movements in the stock market.
What indicators should our listeners keep an eye on?
Look out for economic reports, things like inflation data, payroll numbers, and consumer sentiment, and also watch for any commentary from the Fed that might signal a change in their approach to interest rates.
Good point. So, in a nutshell, what would you say are the key takeaways for our listeners today?
First, be cautious with microcaps and penny stocks. They can have wild swings without solid backing. Second, monitor larger market trends as they can reveal a lot about the health of the overall market. Lastly, keep an eye on macroeconomic indicators and any Fed updates. They're crucial in shaping market sentiment.
Perfectly said, Kate. Thank you for sharing these insights with us today.
Always a pleasure, Asher. Thanks for having me.
And to our listeners, remember to stay informed and practice caution out there. Until next time, keep seeking those profitable insights.